He made a prediction at a salon held today. At a salon? Why would he be making a statement at a salon? Anyways. Hey guys, welcome back to my channel. Kim's here. In today's video, we're going to talk about how Tesla just raised $5 billion in capital and what's going to happen to their stock in the upcoming weeks based on what happened to Tesla after they raised their capital each time, because this is not the first time they raised their capital this year, guys. This is like the third time. And we'll also talk about the NIO, Xpeng, and NIO Stock, how they just had bad delisting news not that long ago, and now they're trying to raise more money. And I want to share you guys my thoughts and my opinion, whether I'm holding on to their stocks or I'm actually buying more. Let's go ahead and get started. Okay, first let's talk about this article that was written earlier this week. Tesla is racing up to $5 billion in the third share sales this year. Tesla is taking advantage of its surging shares by going back to the capital markets for the third time in 9 months, raising as much as $5 billion of common stock. So Tesla just raised $5 billion this month, but that's on top of the $5 billion from September and on top of the $2 billion from February. So far this year in 2020, Tesla has raised more than $12 billion in capital. And this will look good prior to entering the S&P 500. But let's take a look at why they raised their capital. Well, according to this article, the new money will support plans announced in October to double the cars maker's capital expenditures budget during the next 2 years, a range of $4.5 billion to $6 billion. Okay, so it seems like it's great and all for Tesla and their balance sheet, but what's going to happen to us investor? Because every time they raise their capital, they're diluting their share, therefore their stock dip. The question is, how many percent does Tesla stock dip right after each capital raise? And how long does it take for their stock to fully recover and get back to that price before the raise? Okay, let's take a look at the first time they raised their capital earlier this year. I believe it was around February 14. And this is also when the whole stock market dipped, because it's the first crash when the lockdown, shelter in place happened, the pandemic. Yeah, everybody was down. The last time it dipped 54.85%. From February 14, when they first announced it, to April 29, let's just say the end of April. So that's about 1.5 months to recover. Okay, now let's take a look at the second time Tesla raised their capital earlier this year. That was back on September 1st. That's when they made the announcement. Okay, now let's take a look. Tesla stock was $475 and September 1st. And a week later, Tesla stock dropped 30.49%. And let's see how long it takes them to recover. Alrighty, I think it's like around here, October 14, more or less, right? They were almost fully recovered, still down almost 3%, but as you can see, it took them over a month and a half to actually recover. But of course, that's kind of short term. Now let's go further from the last capital raise to that's prior to the latest capital raise and see how Tesla has been doing. And let's take a look after the dip, right? From the dip to the last couple of raise, Tesla went up 96% after the lowest point after the second capital raise. So what is going to happen to Tesla stock in the next week or two? Well, I don't know, guys. I can't see the future, but based on the last couple of races earlier this year, Tesla did experience 50% drop and 30% drop from the last two races. The first one, I guess we can ignore that because that's when the pandemic happened as well. So it's highly unlikely that Tesla will experience a 50% drop. But the second time Tesla raised their capital earlier this year, back in September, Tesla stock did dip about 30%. This time around, I don't think that they will dip as much as 30% from their 52 weeks high. I believe the 52 weeks high prior to this last capital raise was around 650. And right now, Tesla is at 610. So if we take a look, 650 to 610, that's roughly about 6% drop only. So yeah, like I said, the next couple of weeks, we could see Tesla going down a little bit more. But the thing is, on the 21st, Tesla will be included in the S&P 500 index. So I don't think Tesla will drop as much, maybe another 5, maybe 10% at most. It's gonna bounce right back. I believe once they release their vehicle deliveries number, the first week of January as well as the earnings for 2021 Q1, they will see their stock price going up a little bit more. But yeah, it's hard to say, guys, since this capital raise was just out of nowhere. But that's just my opinion. Again, use this video just as an entertainment purpose only, not for financial advice. So I could see Tesla dipping a little bit more, maybe 5-10% in the next couple weeks. So as you can see, historically, it took Tesla roughly about a month and a half to recover from the dip after each capital raise. And this time around, I don't think Tesla will take a month and a half. They might take about a month to recover. But then again, in the next week, I could see Tesla dropping 5-10%. But on the week of S&P 500 inclusion, I can see Tesla surging back up again. And then the first week of January 2021, I could see Tesla going back up again, and probably that's when they reach $650 or maybe even $700 a share when their weekly deliveries number is announced, as well as their earning calls, most likely in the middle of January or toward the end of January. This is just for fun. Again, this is just for entertainment purpose only, not financial advice. You guys have your own prediction. I have my own prediction, and a bunch of other analysts have their own prediction as well. So comment down below. What do you think of this news? Do you think Tesla will dip next week? Or do you think Tesla will bounce back? Or do you think Tesla will take longer this time around to recover? Comment below. I like to hear your thoughts and your opinion. So personally, I'm not going to invest in Tesla unless Tesla dip dramatically. Maybe if Tesla dropped below $500 a share, then I can see myself picking up some more shares. But otherwise, I'm going to be just holding on to my Tesla shares until January 2021. And if Tesla stock dip again in January, that's when I'll be buying more. Let's talk about NIO stock, because guess who followed Tesla footstep? Yep, it's NIO. On Thursday, December 11th, the Chinese auto giant NIO follows Tesla lead to take advantage of surging stock prices. NIO announced that it will offer 60 million American depository shares that will raise up to $2.7 billion on Thursday closing price. The company has the option to increase the size of the offering by an additional 9 million shares. NIO's plan to use the net proceeds from the offering for the research and development of new products and autonomous driving technologies, expanding its sales and marketing penetration and general corporate purposes. And because of this dip, I actually picked up some more NIO shares at $42.22, bringing my average cost from $5 to $8.47. And I don't mind if my average cost for NIO is going up, because I know NIO has a lot of potential. By the way, it's not just NIO and Tesla who are raising their capital. It actually all started with Li Auto. On December 2nd, earlier this month, Li Auto raising their capital and the share went down 10% earlier that morning. They sold 47 million American depository shares, therefore raising $1.36 billion. Li Auto expects to use the net proceeds from the proposed offering for research and development. 1. Next generation electric vehicle technology, including high voltage platform, high C-rate battery, and ultra fast charging. 2nd, the next battery electric vehicle platform and future car models. And 3, autonomous driving technology and solution, as well as general corporate purposes. And on that day that Li Auto raised their capital, their share dropped 10%. But as of Friday, December 11th, Li Auto now is at $31.36. If you take a look at from December 2nd to Friday, December 11th, their share is still down 10%. And a week later, after Li Auto decided to announce that they raising their capital, Xpeng did the same on December 9th, 2020. Xpeng decided to raise $2.2 billion by selling 48 million American depository shares at $45 a piece. Xpeng dropped from $50 a share to now $44.31, representing a 12% drop since that announcement. So was it a good time for these EV companies to raise their capital? For Tesla, I don't mind, because they were up and up, and at one point earlier this month, Tesla reached like $650 a share, which is the 52 weeks high. And of course, they need to build out new factory and finishing their factory, and also ramp up their production for their Cybertruck for on-time delivery. But for NIO, Xpeng, and Li Auto, I mean, they could do it at a better time. because they just had the delisting news that just came out like a week ago, and now they're doing share dilution for general public. I could see most people who do not do much research about this company, they will just, sell all their shares. I guess that's good for those of us who actually looked into the company. I personally bought more during this dip, but at the same time, it sucks to see your account going down because the shares are dropping because of these share dilution news. But I guess when it rains, it pours. Delisting news and now share dilution, they're just screaming to take more of my money. I believe 2021 would be massive for these Chinese EV company, because NIO, Xpeng, and Li Auto all raised their capital. Now they have money to get ready for the new vehicle models that are coming out in 2021, as well as improving their battery technology, battery swapping station, and it'll be cool to see NIO expanding their swapping station to European markets as well. Same for Xpeng, because Xpeng is expanding to European market, first in Norway, and now their deliveries are starting to arrive. So it is quite exciting news. Matter of fact, let's take a look at this article I found. Chinese new electric vehicle markets expect to grow at more than 30% next year. This is an article I found on Friday on CN Tech Post. China's new vehicle market could see an even bigger surprise next year, with growth rates that are likely to exceed 30% and sales likely to reach 1.8 million units, said Yi Xingji, the Deputy Secretary General of the China Automobile Industry Association. He made a prediction at a salon held today. At a salon? Why would he be making a statement at a salon? Anyways, he made a prediction held at a salon held today by China's Ministry of Industry and Information Technology, saying that the government measures, including an aggressive push for new energy electric vehicle entry to the rural markets, have boosted new energy electric vehicle sales by nearly 200,000 units. And if you're talking about global EV sales, I found this article on Market Watch. Electric vehicle sales expect to grow 50% in 2021. I'm not sure how accurate this is, but let's go ahead and read further. Global electric vehicle sales will grow 50% or more next year, while the sales of internal combustion engine vehicles are expected to grow at 2 to 5%. So as you can tell from these few articles that I just showed to you, the electric vehicle sales in 2021 will most likely far exceed 2020. And if you take a look at this year, we have so much crap happening. The pandemic, the virus, the shelter in place, and now that we have positive vaccine news and potentially new stimulus coming out in the next 3 to 6 months, hopefully that will help a lot of people. But at the same time, people right now are all pent up. They stayed home, they're not going anywhere. When everything turned to normal, imagine how many people will go back to work and will be purchasing new cars. Imagine how many new electric vehicles will be sold. Of course, the EV stocks in 2021 will be massive as well. But the thing is, in the next couple of weeks, it's going to be kind of rough. So yeah, guys, buckle up, put on your seatbelt, because it's going to be a bumpy ride for the next couple of weeks. But in 2021 though, I have a good feeling that the EV stocks will do better than this year. But anyways, I want to hear your thoughts in the comment section below. What do you think going to happen to the EV stocks in 2021? Do you think it's going to be better, or is it going to be stagnant? I know for sure it's not going to be going down. Comment below. I would like to hear your thoughts. And of course, if you're new to my channel, I make a lot of video about EV stocks, high growth stocks, and other investing strategies. So if you haven't subscribed yet, go ahead and subscribe. Thank you guys for watching, and I will see you in my next video.